The main headline here is Fed saying the bank passes the stress test. We knew that was more or less going to happen here, but give us some more details here under the hood, because there's a lot more going on than just that headline number.
There certainly is. And one main point to be made here is, yes, they all passed, wee-hoo. But at the same time, you are seeing that the CET1 ratios would have a little bit more of a fall than you saw a year ago. What does that mean? It could also require a larger rise in the stress capital buffers for these firms. Remember, we don't hear about the bank capital payout plans until after Friday, but certainly depending on how much you saw a drop in their capital ratios based on these stress tests would determine that payout. There are some banks that were affected more materially than others in the stress test. Schwab, for example, the stress ratio dropped all the way down to 25.2, which is much more outsized than you saw some of the other banks that were tested. I would also point out something very interesting that would not talk to the numbers themselves, but in the exploratory results, you had the Fed testing market exposure and particularly hedge fund exposure.
Hedge fund exposure.
What would happen if the 5 largest hedge fund counterparties were to fail for these banks? And that's where you saw some really interesting commentary by the Federal Reserve. The idea that the banks themselves could lose a material amount of money in that regard, up to about $22 billion is what the Fed calculated. And they say it's less predictable. It could vary based on the shocks, but they're using this information from the market to better understand that counterparty risk. Remember, this is
that going to result in like higher capital requirements, or we just don't know yet?
You know, it's interesting. When they first kind of drew up Basel III, there was a lot of thinking about how the trading
Basel III. What happened to that? Is that still going on?
Basel III Endgame. I'm very sorry to forget the word, but
which is like the worst Marvel movie ever made.
Exactly, and the banks believe so too. Trust me. But you know, when you think about the trading counterparty risk that the banks are taking on here, and the fact that you had record levels of exposure in leverage for these hedge funds at the end of last year, and now the basis trade is coming back in full form as well, there are a lot of questions under the surface about how that might play out at the end of the day.